All right, welcome everyone to the Directed IRA webinar. We are so excited to be with you today talking about how to fund your deal with other people's IRA. And this could be your IRA that's getting funded from someone else's IRA. This could be you individually, your company, whatever it may be. But really important topic. Aaron's kind of here helping me co-host, but he's also going to be part of the guest experts.
Yes. Yeah, big shoes to fill.
Yeah, this is Aaron did this before he worked at Directed IRA. He was in the investment space, raising capital, doing deals, and so he's got a lot of expertise on it too. From a different angle, we're going to bring in Bill Predebon, who will be our first expert, who's going to be talking about how he's used IRAs in deals. I think it's really helpful to people to understand that. If you were at the Self-Directed IRA Summit, Bill was one of the people on the panel we had that was one of the most
dang good panel, probably the best panel.
Yeah, people really loved that panel that we did on just like doing self-directed investments, kind of deals in the details on them, real world transactions. And you'll see as you hear Bill, he's done a lot of deals, has a lot of experience, worked with a lot of IRAs over the course of his investment career. So
it's definitely a top 3 panel. I mean, we
had 3
panels.
So. Okay.
Top 3. And the recordings just went up. So
yeah, and
you can go grab those.
If you're like, I missed the Self-Directed IRA Summit, go to sdirasummit.com or matsorensen.com. Either one, you can buy the recordings there. So, all right, do you want to give me announcements or what do you want to say here?
Well, we do have some key deadlines coming up. So we have Roth conversions. Okay, if you're planning on doing that.
If you want it to hit for 2022, your taxes in 2022, you got to have it done by December 31st.
Let's see, we have you also, for solo Ks, got to adopt the plan, do your employee elections, and you have a special still going, so.
Yeah, we got the solo case special. The law firm has that, $100 off if you use an attorney, $50 off for the docs only. And then we also have a $100 discount off on custodial accounts for the solo K at Directed. Set up during special too,
which is a good option. If you're like the do-it-yourselfer, hands-on, like don't do that. But if you're like, hey, I need some help, like the easy button.
Let me say, if you're the do-it-yourselfer that's actually good at it, then go with that option. Because I know a lot of do-it-yourselfers that aren't good, and they should have
eject. I need help.
They should have paid someone to do this for them.
Exactly.
Like it was like me. This is like me, do-it-yourselfer Matt changing his oil. It's like, a day and a half later and the car doesn't work. It's like, seems like a simple task that anybody with a college degree could figure out. Exactly. I'm kidding. I'm not that dumb, but you know what I mean? Sometimes we got to stay in our lane.
HSAs too. So open enrollment's going. So if you want to self-direct your HSA, open enrollment, I believe that ends January 15th. Is where that ends. December 15th if you want it to be effective for January 1st, but you would need to select an eligible high deductible plan for HSAs, which is a cool option. You can self-direct an HSA. So those are kind of the important deadlines for the year that we have coming up. And, we have the holidays, which are awesome.
Tis the season.
Yes,
all right. Well, I'm going to give a disclaimer here. And then I'm going to bring on Bill as our first guest. We're just going to dive into it. Do you want to go over Q&A before you bounce, though?
Yeah.
Just the process on Q&A. We'll probably do questions after Bill.
Yeah. So what we'll do is I'll kind of moderate. Just put it in the Q&A. Don't drop it in the chat. The chat's for any like technical difficulties or troubleshooting stuff. But just drop it over in the Q&A. And then when I come back, we'll hit on those. We'll kind of do like a fire round.
Okay.
So we'll do rapid fire Q&A.
Yeah, and we'll see.
It'll be good.
Maybe there's some questions we can get from Bill if you guys want to pass any to me. If there's a couple questions at the end, we could grab for Bill too.
And I'll answer some. We have a few of our staff, so I'll answer a little bit of the questions when I hop out here in a minute. It'll be good. So we're bringing on the talent. I'll be like the backup singer today. So
yeah. So all right. Well, I'm going to bring Bill up here in a moment, but before I do, Attorney Matt needs to come and do his job today and give you a disclaimer. So just remember, this is informational, educational, not financial advice. Seek out your licensed professionals when conducting transactions. And that's it. I mean, that's all Attorney Matt needs to say. Like I said, he's the boring Matt. Let's go back to other Matt.
We like Attorney Matt, though, like when we need to, right?
Okay.
All right. Cheers, everyone.
All right.
Welcome.
Okay, I'm going to bring Bill up on here, and I'll start telling you about Bill as he's getting seated. So Bill I've known Bill for probably 10 plus years. I've known him as kind of a real estate guy, doing a lot of deals. I know people's IRAs that he's worked with. I've just seen a lot of his stuff as being an attorney, working with them over the years. So, and then, like I said, he spoke, and many of you saw him at our Self-Directed IRA Summit just a couple weeks ago. He did an awesome job. So, Bill, first, welcome.
Thank
and
you.
I'm going to get you on camera here. Sorry, I have the controls here. That's not my strong suit. So, all right. Well, I thought at the summit we kind of opened up, and I was just like, "Dang, Bill." I asked you how many retirement accounts have you had in deals, and explain your history on that, just the numbers.
Great. So I've been investing since 2008. That's when I first started doing some short sales, and I did everything with no money. So I didn't even know. It was interesting. Matt and his group, they do some education, as you probably know, all over. And I will tell you that I remember seeing the self-directed retirement class, and I remember my investing career. I was so broke. I was like, that's the dumbest thing ever, because I didn't have any retirement. And then when I went to the class, I was like, oh my God, there's trillions and trillions of dollars in retirement. I should learn how to use the self-directed money, right? So that is why I'm here with you. So since then, I've done about 250 plus or minus deals, mostly fix and flip, over 150 fix and flips. And then moving into a lot of long-term buy and hold stuff, short-term rental, and that sort of thing. So and we were talking. I will tell you, I've borrowed. I bet don't quote me on this.
So let me start before you.
60%
of those deals were funded with an IRA somewhere in the mix.
You
needed money on the deal, for maybe acquisition or rehab or both.
Typically both. Yeah.
Typically both, and the majority of the time, an IRA is involved somewhere.
Correct. Yep.
I think that's surprising. I think a lot of people don't realize that, and I think that happens for you just because you know the strategy. How many people out there that are real estate people are doing deals and don't even know of this? They're leaving all this money on the table. They're making it harder on themselves to go raise it and get a deal funded.
They do. Yeah, they do. And it's interesting is there's so much we don't know. And then, typically we're just taught, especially at work, to just pay in, pre-tax dollars, whatever they can afford, if you will, or whatever the employer matches. And then, again, it's a retirement account that they know nothing about, and so they have no control. And here they can learn that they can move those money from old retirement accounts, right, and all different, or even stop new ones, all different options for you guys to take their funds, and then there are typically, at the very least, double-digit returns secured by real estate. There's so many options that the custodian directed IRA would have for you to be a partner, to be a lender, to be a combination of the both, to invest in a business. I mean, there's so many, even to be just lending for a business. Yeah. So it's really exciting.
Yeah. So, everybody finds their own deals, of course. But we want to talk about this today in particular because so many of people out there are learning how to fund their deals. And that's why we're trying to speak to today is if you need to fund your deal, you individually, your S Corp or LLC, or maybe it's even your IRA, you're trying to get other people's IRAs to help fund, that you need money to make this deal happen. This is real important. So, how do you start? If someone was all right, Matt, I'm doing real estate. I think that's the easiest example. Everybody gets it, but this could be any type of investment type stuff, but real estate's the most common. So what would your advice be to someone that's starting out? What do they need to know? How much do they need to know of the IRA stuff?
So I think most importantly is they need to know about that it exists, right?
Yeah.
Even the basics, what types of investments.
Well, let me back up. What was your first one? When you're all right, I got to figure out how to do this. And you're somebody, I don't know if you remember, but
I do remember
one.
My first one. It was $80,000 on a, and it was the crash. So it was 2009. Okay. And I actually was buying on a discount at a discounted rate from a hard money lender hard money lenders were taking back 70% of the homes they lent on. And so this first deal came and it needed they couldn't even do anything with it because it just was an unfinished project, right?
Yeah.
Like everybody, so everybody abandoned it. So so they were able to give me the hard money loan, but they also want skin in the game no matter what. So, and I had to fix it. They weren't going to give me the fix-up money.
Yeah.
So I met somebody that actually, he didn't even have the money. It was his mother. And he's like, my mom has wanting to put some money to work. She's getting older. She's been retired for a while. And perhaps you could use that money. And it was in a old retirement account.
Yeah, like an old 401k or something.
And they moved it to a self-directed.
Yeah.
And she was able to pull the entire amount out.
Yeah.
And to be honest, I was very new. I gave a 20% guaranteed return on that.
Yeah. Very generous, Bill.
Very generous. But
the Bill's not so generous anymore.
It just depends. There's, like we talked about, there's, sometimes you can get that with a little more risk involved and not be just a lender. But the deal was pretty solid and it worked out for everybody. So, yeah.
Yeah. So, and I think that's the nice thing about it is it can be a win, I mean, that's what the private lending, when it's working right, is there's people out there doing deals like you that know how to do deals, know how to analyze, and you've done 250 of them, you've gotten a lot better, I'm sure, from number 1 to 250. But then there's also people on the sidelines, and this is funny, we get it all the time. Where can I invest my self-directed money? Well, there's a lot of Bills out there, that are out there doing deals that need funding. And the banks aren't going to lend on that deal you had, but it was a great deal.
Correct.
It was enough where you made money probably. The lender made 20%. I mean, was she going to get that in the stock market? I mean, it's a win-win.
Yeah, I remember that was when October crash was 1,000 points in one day or something. And so those of you looking to fund your deals too, I start out with, it's interesting. We were talking a little bit about the retirement accounts at work that most people have. They're traditional, right?
Yeah.
And you ask them, how is your, what's your typical expected rate of return, or how do you feel you're doing? And most people naturally are gonna, they're gonna say I'm doing okay. And then it's like, hey, if you ever get a chance, just check, And then I had one gentleman come back and say, oh, you know what? I've actually made like 16% over the last couple of years. And actually, Matt, he listened to one of your teachings on self-directed, and he went back to his accountant and said, listen, I've been doing this job since 2002. I want you to just run it to 2017. And it turns out he made less than 3% over that because of that crash in there over the course. So he had 200 and something thousand in this account, making less than 3% over the course of 16 years. So he immediely gave you guys all the money and then gave it all to me. You know what I mean? Because he was, and he averaged about 12% plus, 12 to 14% with me for his first year in real estate. And then he got really good and he went off and started doing it on his own, right?
Yep. You trained him up.
Yep.
So how are people doing that? Is you're using like a promissory note secured on the property? How is that? What's the most common way?
I think that for the lender, the typical first investment would be a promissory note secured by a deed of trust. The money goes into self-directed. We'll send it, directed IRA. We'll send it over to that title company, and then they'll record a deed of trust, and then it's just reversed at the end, right?
Yeah.
I have relationships with people that a lot of them, you can talk to this too with the checkbook control, right? So now they've got like instant control of their retire. It's such a golden opportunity, I think, for people that understand that real estate's a strong investment tool or someone's business and things like that.
Yeah.
And so some people just lend me for a year.
Yeah.
You know what I mean? Just straight up. They don't care if I do 5, 10, 15 deals with their money or whatever.
Yeah.
Yep.
Now let's go back to Bill's first deal, because I want to make sure for anybody who's new that's like, man, I didn't know IRAs could, how are they involved in this? Like, let's take a step back. Let's go to that example Bill had on his first deal. Somebody had a 401k, and maybe they were at Fidelity, let's just say. I don't know where the heck they were.
Right.
But, do you remember where they were?
I don't.
Okay, let's say it was Fidelity, all right? And old employer 401k. All right, well, if Bill called Fidelity, or that person, that lady's old 401k, if she called Fidelity, they'd be like, yeah, you can't do this. Well, that's not because retirement accounts can't lend money on a real estate deal. It's because Fidelity accounts can't do it. So they have to move the account to a self-directed company, like Directed IRA, of course. And then we will do a note. I mean, you do the documents, or you have someone do the documents. And then there's just a promissory note. If the money's lent, there's a deed of trust that goes on title. It secures the money. It might be in second position, though, if there's a hard money.
Yep.
Or there's maybe some creative financing and seller financing, whatever's going on. So maybe you're in second. but you're getting interest and some points possibly. And now your IRA owns that. Your IRA gets that. Let's say you negotiated 10% and 2 points, let's say. Your IRA is getting 10% interest back on its money, and it's getting 2 points for the loan. So 2 points meaning you had a $100,000 loan, you're getting a $2,000 fee basically for the loan, plus 10% interest as the money's loaned out. And so for that person, the next person you talked about, had like analyzed their stuff over 15 years, it was like a 3% return. They're like, yeah, that's not going to cut it. I mean, if you look at another 15 years of that money, I mean, the difference of your account at 3% and 15 is like growth like this, So, so I just want to take a step back. Now, one area where people get stuck, I'll say, that are new to this, and this is why I think it's important people know like the transfer and rollover rules, right? Because you can talk to someone and they're like, I have an IRA, but what if they're like, well, I'm at TD Ameritrade and I got an IRA at TD Ameritrade. Okay, well, you're going to need to move because TD Ameritrade doesn't let you self-direct. They'll let you self-direct to buy stock, whatever stock you want.
Right.
But that's it, right? I do see one big hang-up, though, where people will get stuck. You probably ran into this. Is sometimes people, like, they're at a current employer,
Correct.
And they're, like, 40 years old. They are not leaving. They're not retirement plan age yet, so they can't get the money out.
Correct.
So sometimes you'll run into someone that wants to invest in your deal or fund or whatever you're doing. I mean, this could be a private placement. This could be a startup. Well, I don't care what we're talking about here, but as you're out talking to someone, they might be like, I want to invest in it, but they're 40 years old, employed at the same company. They're on the Vanguard 401k structure system. Like they're locked into that while they're working at that company. So, but tell me how you talk through it with someone. And it might seem like basic, but like, how do you actually like talk to someone and like say, give me your money, I have a deal?
Well, so it's so awesome again. And typically the first question out of my is if the timing was right and a decent real estate deal came up, have you ever considered investing in real estate? It's just a simple question like that.
Yeah.
For those of you who are on this looking to borrow money through self-directed and then get into your deals, one of the gentlemen that I borrowed money from, he actually gave me $152,000 on a long-term 18-month note for buy and hold of mine, where I had to take out a hard money lender. I ended up keeping the house. So for you doing the deal like I did, so I gave him 8%, and he was super happy because it was the gentleman that right out of the gate was only making 3%.
Yeah.
So it's interesting when you ask them, hey, well, what are you accustomed to making? For those of you who are going to be lending money, of course, you're going to negotiate what you can, the 2 points, 10%, 12%, do a hybrid, that kind of thing. But, those of you borrowing, you don't have to start at 10 or 20%.
Right, yeah.
You can start at 6 or 8, and they're typically they could be very happy with an 8 to 10% return or 9 or 7% return secured by a nice rental property, and you could buy that property with creative financing, like you said, or even hard money, and the numbers work, and then you could refinance it later. It's just, there's so many options both on borrowing and lending side. So typically I'll ask if, and 2.9, give or take people out of 3 are interested in real estate. And they, and go back to even that gentleman you're talking about or the woman that you're talking about that has an existing 401k, they're still working, so they're still contributing, they can't borrow, right? Imagine if they know somebody, right? And they could negotiate 4, 6, 8% return. Then they could come to you and you could borrow their retirement account at 10 or 12%.
Yeah.
They could, They could be in the deal with you, even though they can't use their own 401k if they understand that self-directed is possible.
Right.
They might know old Army buddy or something that has an old, that just sits there, 10, 15, or 80,000. They just sit there all the time for years.
Yeah. And, people are like dying to be engaged with their money. They really are. It's just like we got tricked into just like clicking a few buttons when you enrolled in your 401k, and they're like dying to like get engaged with this. But they look at the stock market and the mutual fund. They're like, well, I'm invested in this. I mean, I could go over to this, but it kind of just like more of the same. And so a lot of people are like, oh my gosh, a real estate deal, I can actually go see it maybe, and there's going to be, like, I get a lien on it like the bank would get, now I might be in first or second. You got to, there's different risks there, of course.
Yep.
And so, so it can be like an actually exciting conversation. And I know Aaron's got some good tips on this, on just how to talk to people. But one thing I was going to note, just attorney Matt, this, you really don't have to like go out and like solicit and like, you're not like, hey, I'm taking investors. Like there's some securities issues in doing that. But I think just working with your network and people and expanding your network's a good opportunity to get people that know you're doing this. Like what advice do you have there?
I think, so I was thinking of one thought. So in having that conversation with people that you're trying to get your deals funded, asking them, what they're accustomed to making or what they would like to make even on a return on an investment. But, understanding that if you understand the real estate transaction and you understand what it means to be in first, and most of you, I'm sure you do, you understand first position, second position, you understand what a deed of trust or a trust deed is and the security of the real estate, then that's a sophisticated conversation even at a high level or a low level, if you will. So when you're talking to the other person, they've never really done that. So they're going to start to listen to that and they're going to see that you have this good knowledge, even though it's a little bit limited. And then the rates can always be determined. And typically people just want to know, how much do you need? When will I get it back? And how will I get it back? They're not even that concerned with, well, what happens if you lose? That should be up to you. You want to consult with an attorney like Matt. Yeah. But they're concerned with how am I going to get it back and how are you going to pay me and when is it going to be back? And then, you're like, oh, I can give you, 8%. I'll give you a $500 upfront fee and we can roll it over and it'll be a year on this deal. And they're like, oh, that sounds really good because they're secure. They know the real estate's, if it's burned down, the insurance will pay them, So it's really cool. Those are the types of conversations. So that little bit of education would really help. Mm-hmm. And then, you can, we like you were talking about the oil. You don't want me changing your oil either, by the way. not at all, or cooking really, for that matter. But there's so much out there on YouTube and everything, and I don't. It's not that I don't recommend that, but I would get some. I would research the education you're getting because we could spend all day trying to sell. And in human nature, we want to do it on our own. We want to learn on our own. We have the ability, but when we don't know, we don't know. We don't even know what education we are finding, whether it's true or not, or who to listen to. So I would get with someone that has some experience. I always say that even when you're listing a house with a realtor or you're talking to a realtor, if they don't own a rental property and you're trying to buy a rental, maybe they shouldn't be a realtor. I don't mean that badly. I'm just saying. So if you talk to a guy like me or somebody who's even done 1 or 2 or 5 deals, and at least they've done a few deals, and ask them how they did it. It doesn't mean you're going to take everything they say unless you really like and they really sound like they know what they're doing. Then you could take that and go to somebody else. You know what I mean? So that's how you can get in that. And if you ran into someone and you asked them, oh, you've done a few deals. Have you ever borrowed money? Yeah, I borrowed this money, and in fact, my dad's brother had a retirement account, and they're like, now you pay attention because now you found someone who's actually just done it even once, and then you can gain from that knowledge. I think.
Yeah. I think, Bill and I both teach and speak sometimes at Renatus and part of that community, which is a great real estate investment education company. There's real estate investment clubs. Find the real estate professionals in your area. If that's what you're doing is real estate, and one of the things that is interesting in those groups, no matter where you are, is there's people doing deals that need money, and there's people that have money that need deals. Yeah. Okay? And it is the perfect convergence of that is these self-directed retirement accounts, because if you're someone that is doing deals and you need money, and you want to go talk to the 10 people in your network, you're like, I'm going to talk to my cousin. I'm going to talk to my best friend from college. I'm going to talk to my workout friend. I'm going to talk to my neighbor down the street that I talk about money stuff with. You make whatever this list is in your life, and you say, hey, I'm doing a real estate deal. I need $100,000 to do the rehab. Are you interested in doing that? And do you have an IRA? It's more likely they're going to have $100,000 in an IRA or 401k
than cash in the bank.
Than cash sitting in a bank.
Yep.
And so your success ratio goes up drastically.
So, that's a great point, Matt. That's just a great point. Yep.
And that's where you say, when you said 60%, that really rang true to me at the summit, because I was like, I always have people come up and tell me, especially really new real estate investors, like, man, I learned how to got my first deal funded by someone else's IRA. And it was a friend or a distant family member or something, or another investor. And I'm always like, that's awesome. But to hear your number was really surprising. And it rings true because you said the trillions too. Guys, there's $30+ trillion in retirement accounts in the U.S. There's no more place of money of investable assets than U.S. retirement accounts.
And it's interesting because, their advisors are always going to say diversify. They're not going to say no to real estate. They're not going to say, oh yeah, take money out of my account and go do it. But if someone came to them and said, hey, I have this, I was thinking about investing in real estate a little bit, they know that that's a good diversity. So they can't sit there and go, no, don't invest in real estate. You know what I mean? That's crazy. But what I'm saying is, most people know that they don't know how, but they know that it's a good point. So when you bring that up and you're like, hey, I've got this deal, I'm interested in borrowing some money or partner with some money on a real estate deal, people's eyes will perk up, their ears will perk, they'll open their eyes and they'll be like, hey, what does that look like? And if you have just a little bit of knowledge, you can.
And I think a lot of people are like, you can be like, have you ever thought about bringing a private lender? I mean, I need money on deals and people are like, I could be a private lender. Yeah, do you have like $100,000 in your IRA or old employer 401k? Yeah, you can be a private money lender. Like you could, I'll lend that money. And when I do this deal, I'm going to do the next deal. And so I was going to ask about that. Like now, I mean, you've done so many deals. I mean, and I just see this with other clients is like, is it very hard to go get someone that wants to give you money on a deal? Like if you need to fund a deal tomorrow, like what do you do? I'm just curious.
Well, honestly, my network is pretty big.
Yeah,
it's grown, so that helps, right? And but I get new money all the time. Believe it or not, I think I've raised somewhere near $30 million, and those are fresh $30 million bills, right? Not like you gave me 100, then you gave me another 100, and it counted as 300.
Because a lot of people, they do one deal, they're like, all right, let's do another one.
Correct.
I love getting 10% or 8% or whatever they got
They'll
paid.
give back all the time.
They got 20 on the early days,
right?
Let's keep this rolling, Bill.
Yep, and exactly, and they do like it. And then sometimes I'll go back and renegotiate, right? But
but it does get easier, I think, was the point I was going to say.
Correct.
It's like once you've done enough deals, I mean, you got to be good, right? Like obviously, if your deals go bad, especially you lose people's money, it's going to be harder to raise money.
Correct. But what's nice about real estate, and you'll learn this. I'm telling you, if you're not so out of control, just desperate or eager to buy your first deal, and you actually buy it relatively, even 10 or 20% under as is market value. Generally speaking, what you lose is your profit, but not their money. If the deal goes south, if you've got a deal that's going to make $10,000 in 6 months, and anything can change in 6 months, and anything can happen, and $10,000 is gone in 5 minutes, and then you could lose money. But if you've got a $30,000 or $40,000 profit built in, and you're borrowing the down payment and a little bit of fix up, then you should have $30,000 or $40,000 to fudge. And if you lose it all, you didn't lose any money. They still going to get their money and their interest typically. Yeah. You know what I mean? And then you can always move it. If there is a minor loss, you can move it into the next deal.
And that's a good way if you want to keep a good relationship. Try to be like, I'm going to get you in on the next deal to try and get you paid back out.
Correct.
That's a good business move to do. Because you're going to have your reputation at the end of the day, and that's what's going to be most valuable as you try to grow your business. But all right, you made a really good point, because I want to transition to one final question I had for you, which was, and then we'll see if there's any other questions, and Aaron's going to come up here in a moment. But someone's a lender to you, they get paid back first before you get any profit.
Correct.
And so they are a little more protected, right?
Yes.
Now, do you sometimes partner with people though in a deal? Because some people are probably like, no, Bill, I don't want to make 7%, 8% on a loan. I want to get some of the profit. Can I get a piece of the profit?
That's correct. So absolutely. And I will, depending on the deal, I give a considerable amount, multiple double digits. It could be 20, 30%.
Okay.
So if I project, and nowadays my deals are a little bit bigger, but if I'm projecting, $30,000 profit and they want 30%, they can make $9,000, and typically a $30,000 profit can be flipped in 4 to 5 months. Mm-hmm. So that's a pretty normal remodel, right? Not a rehab, just a remodel.
Yeah.
And so you can annualize that, and it's pretty solid. Now, if I'm borrowing their money and or I shouldn't even say that, if I'm partnering with their retirement account account's going to be at risk. I am not going to have a promissory note.
Right.
I'm going to have an agreement with a
for
partnership
the good
agreement.
and the bad.
In fact, you're one of the best partnership agreement lawyers I ever met. And I put this together that says, hey, if we take a loss, we're going to split the losses, and you're going to get paid back by my half of the losses on the next deal. I don't want to go do another deal and then have to pay all my profit to the other. You know what I mean? I got to have some incentive to do another deal. Right? No one wants to work for free. Right. Yeah. So we work that out, and it's pretty good. And they're comfortable knowing that there's actually a backup to the loss. You know what I mean? And now they can make that. They can go to sleep, do their regular retirement account, do their work stuff, do their own investments, have their own life and income, and then they can have this on the side, making them 10, 20, 30%.
Yeah. So we see this quite a bit. This usually requires the multi-member IRA LLC. We've got another webinar on that, podcast episodes on it. It's a chapter in my book. But you can have that model, and we do lots of these. The law firm KKO's Lawyers sets them up, but the directed IRA account for the self-directed investor is you got basically a work partner, in this case, Bill, who's got the deal, doing the work, and you basically got the money partner, which is someone's IRA or 401k.
Yeah.
It could be their HSA, whatever.
Yeah, HSA too.
Their self-directed account, and so they partner in the LLC. And so if they put in all the money, usually what happens is they get paid back their money first, and then you split profits.
Yep.
But you guys are both on the line, in terms of what if there's a loss? Ooh, now they can get hit, because if they don't get their money back, let's say the deal goes south, in a loan, you still owe them the money.
Correct.
Right? Technically in a partnership, it's really, if you're agreeing to catch them in the next deal, that's just because you're being generous. You don't have to do that.
Correct.
They agreed for the sunshine on the upside. They got to be cool with the rain on the downside.
Correct.
So that's kind of the risk of that, of course. And Obviously, I've had clients go both ways, and it sounds like you still do a little bit of both.
Yeah.
Depending
absolutely.
on the deal.
Yep.
Okay. All right. I don't know if we have any questions that we want to field for Bill. I don't even know how I would do that. But we'll, Aaron's going to come up here in just a moment. And I don't know if you have any questions there, Tristan, you see.
Yeah, hold on. Let me just, I can only see a couple of them.
All right.
Yeah, it's pretty exciting to learn, what's possible and how much money is available. And I'll be honest, the whole point of this conversation is, for funding your deals, you would be surprised, like you said this, you said it, is people they do like the idea and the concept of controlling their retirement a little bit.
Yeah.
Maybe not all of it, whatever it is, but they're having that control and seeing it, touching and tasting it, and feeling confident, and then they can actually educate themselves on it alone.
Yeah.
And then you've got a partner for life. If you do that first deal with them, and it's really a great opportunity. And like you said, I can find money in less than 24 hours anytime I need it.
Yeah.
Yep.
Okay, well, Bill, appreciate you being on. I don't know if
my
you want to
God.
give any contact info for people, or
that would be fantastic.
What do you want to tell people? On your social, you go.
Sure. Well, if you're taking notes, and they can always
throw
reach
it in
these
the chat,
guys.
maybe.
760-533-3141. That's actually my personal cell phone number.
Wow,
So
that's generous.
it
Okay.
is. I don't mind. And of course, if I don't have you on my phone,
Bill's married, guys, ladies, guys, guys too, but
Right.
ladies, so business calls.
If I miss
All
your
right?
call, just text me. Hey, I'm interested, and I'll get back to you. And if I don't in that day, text me again, because it just got buried. But I'll get back to you. And then of course it's Bill Predebon. I'm on social media, on Facebook, whatnot.
Yeah.
And
if you follow me, I'm connected to Bill. You can probably find him from my followers.
Absolutely.
And stuff.
Yep. And I tagged you in my post for this,
Okay.
so they can check there. And
Okay.
absolutely. And you've got my information.
Okay.
So that would be great. I would love for people to reach out.
Okay.
Yep.
All right. Well, thanks so much, Bill. Appreciate it.
my
I know you
God.
got another
It is
thing
an
you're going
honor
to.
and a pleasure. I got a tennis match tonight. So.
Oh, okay.
Yep.
You know what's funny? I signed up for men's league.
Oh yeah,
at
I
the
know.
tennis
Where are you?
at the Village. This was 2 years ago, and that's right. And anyways,
It's
so
so
I
fun.
signed up for it, and I saw Predebon on there, and I'm like, oh, I might be playing Predebon. Is that Bill Predebon? And then I text you.
Yeah, you did. And you're like, and then I still haven't seen you. It's been 2 years.
This is my life. I missed every one. I felt like the biggest tool. I was paying a little more for it, I was emailing the whoever it is that puts the bracket together. And I
Yeah.
was like, I can't make it. I'm the worst. So I'm gonna get back on it though.
It's awesome.
All right.
It's
Okay.
awesome.
Okay,
Man,
cool.
what a
All right.
pleasure.
Okay.
This is such an honor. Everybody, thank you so much for your time. And wow, you're in good hands. And I can't wait to turn this over to Aaron.
All right.
It's exciting.
Okay. All right. We're just gonna bring Aaron up.
Oh my God, what a pleasure. Take care, brother. Thank you.
Thanks, Bill.
Thank you.
All right. Feel free to step out when you're ready, because I know you got a match to be ready for. So who do you got? You got Sampras, or who are you playing today?
It's actually a mixed doubles tonight. so
Oh,
it's pretty
okay.
fun.
All right.
Is it the retired bunch? Yeah, like Sampras, Agassi, all the
If you wanna
greats.
find retirement,
Join a tennis league, all right?
I'm not kidding, and they have money.
Okay, don't do what Bill says, do what Bill does.
Yeah.
Okay,
Oh,
he's
that's
going to
good.
play tennis.
Yes.
And he's going to tell people there, so what do you do? I do real estate. Yeah.
You should see the hard money lenders and private money lenders I play with and work with.
There you go, right there.
Your network.
You are who you roll with, All right. Okay, did you want to
good.
jump in on any questions? You could probably field a lot of these if you wanted to, or you want to just get into your stuff?
Yeah. So yeah, let's do some Q&A while everybody's on there, and then we'll roll into some other stuff. Okay, let's do rapid fire.
All right.
All right, this comes from Cheryl. Does this have to be? Oh, Cheryl, you got me like 5 in a row. So let me just kind of go through them and triage these for a minute. Does this have to be through a self-directed IRA, or can we use a solo 401k?
Yeah. Either one, yeah. Could do a solo K. You could do private money. A lot of our, I mean, I remember I had a client that did had about 600,000 or 700,000 they did in a solo 401k. One of the really early solo 401ks I did. They have like a 10-figure account right now. All they do is private money lending, but they've been doing it for 10 plus years, and they just got a machine on it. So.
Okay, so if an individual, all right, this is good. If an individual wanted to use their own IRA to buy real estate, can they just use that money and then use the proceeds from the rent as your mandatory distribution?
If an individual what?
If an individual wanted to use their IRA to buy real estate, can they just use that money and then use the proceeds from the rent as their mandatory distribution?
Yes. So if you're hitting 72, you have to do what's called RMD. So your retirement account could buy the property or the investment or whatever it is. If it's a property with rent, the rental payments are coming in, that's usually enough to satisfy RMD. Now you got to look at the value of your account versus what's your rent and what's your cash flow. Make sure the cash flow is going to satisfy your RMD. I don't know, if you got a property that's really expensive that has crappy cash flow, it might not meet it. Just run the numbers, yeah.
Okay, anonymous attendee.
I'm always, these ones are always,
It was like make you cringe a little bit.
just make up a name, just be,
Steve
just
has
be
a
Peter
question.
Lemongello,
With the market being, this is a good one. With the market being down, is this a good time to do the Roth conversion or backdoor conversion? So I'm assuming with the market being down that your account has gone down, the market value of it. That's what I'm assuming.
Yeah.
So now would that be a good time to do a conversion or backdoor?
I think it would be to do a conversion. I mean, the back door is like you
Different.
kind of put the money in and you automatically convert, so you're not really, the market's not going up or down. But yeah, you could do a Roth conversion because the market's down. I mean, that's the hard thing, is it's like, is the market down? Is it up? I mean, it's down from what it was a year ago, but it's up from what it was 3 years ago. I don't know. Where's it going to be next month? It might be down compared to what it is today. But yeah, if you believe that it's down of where it's going to be in the future and you want to get to Roth, yeah, absolutely. Convert now. One thing you could do too is if you're trying to lessen the tax bill, a lot of clients at year end I like to do is let's convert half right now and then convert the other half on January 1st of 2023. That way we're splitting the tax bill, because when you convert, right, you got to pay tax on the balance that you convert. So if you convert the whole thing in 2022, you're going to tax bill all in 2022. And I don't know if it bumps you in another income bracket or what, but so sometimes I like to kind of chunk it out.
The chunking method. Okay, Penny, I only have $10K in a self-directed IRA. That's cool. And want to invest in notes. I know this is just a little bit of money. What is the best way to get started? Okay, I mean, part of that's like, well, we had our guest, Bill, on. Yeah. That was a good example. He's always doing deals, and I guess that leads into one of the things that I always love doing is being the person that's really good at finding deals.
Yeah.
Too. So, but Penny, great question. I mean, it's, again, networking, getting out there with people that actually has deals that you can take that $10,000 that has that smaller minimum amount that they would be okay with. So typically on something like that, if it's in a note, it's like maybe a small, like I'll call it
partial, or what do you?
Or no, you could do a partial note, but it'd be like a smaller rehab too, like where you're the rehab money.
And maybe on like a double wide or something. I don't know what 10 grand.
Maybe it was like paint carpet. That's like a lipstick. They call that a lipstick rehab, paint and carpet. So you could do some of those. We had a really great webinar actually on small dollar investing with an IRA. So Penny, go check out that one. We give a lot of different strategies on that. I think that's a good one.
What I'll say is it is a challenge at 10.
It is.
At Penny, and you might need to get a few more years of contributions in there to where you have enough where it makes sense and you're going to be able to do a note if that's what you really want to do, because you need to have a borrower who's willing to who's willing to take the time to only get 10 grand from you.
Yeah.
They got to do some documents. Generally if it's on real estate, you want them to secure it on the loan. That takes more documents, a little more cost. For 10 grand, it just may not be worth it to them. I usually say at around 50 is like you're going to be able to find stuff and people want your money or there's deals to do. At 10, you kind of got to be the deal maker, not the person, who just wants to lend, the money person. You want to be finding the deals. And we have lots of clients who do that are in the real estate space. For example, they're wholesaling properties. They're buying stuff subject to and just putting a little bit of cash down. So maybe look at, can I be a deal person? If not, just save more. Even me, like it took me 3 years of retirement account contributions, and I was maxing out a 401k, doing backdoor Roth, till I had enough where I did my first deal. So you might need a couple more years contributions, or you got to turn into the deal maker side, or partner with a bunch of other people to kind of take down a deal where you're a percentage of it for your 10 grand.
I will say this too, like there's a lot of different funds out there where the minimum's like $1,000, and they do that for a reason because they're crowdsourcing the funds.
Yeah.
There's usually Reg A offerings, and they have the terms listed on the site. There's different crowdfunding sites out there, and there's different ones here locally in Phoenix that we've had special guests too that are out there. So there are options. So go check it out. We don't want to discourage it, but there's options out there. Okay, so any concerns with prohibited transactions and partnerships with family?
Yes, definitely a concern there, especially the model Bill and I talked about of work partner, money partner, and the money partner is someone's IRA. Well, we want to know who in the family we're talking about here. Aaron and I were joking about the rich aunt.
Yeah.
If it's you and you've got a deal and your rich aunt has an IRA to be the private money partner, whether you're partnering in an LLC or they're lending you money, doesn't matter. Mm-hmm. That's okay because aunts and uncles are not disqualified persons. But if it's your mom or your dad's retirement account, not going to work. That would be a prohibited transaction.
It's always the rich aunt, right? The rich uncle's not rich anymore. Okay, let's see. If using a Roth, when would taxes be triggered on any profits?
If using Roth, when would taxes be triggered on any
profits?
Never. A Roth IRA, you don't pay taxes unless you got UBIT tax.
I think that's what he's probably talking about.
But if your Roth is just doing some of the private lending we've been talking about, no UBIT tax on that. It comes out tax-free at retirement, of course, 59.5, as long as you had the Roth for 5 years. Mm-hmm. And I don't know, maybe you're flipping properties with the Roth. Your Roth owns the property and is flipping a bunch of properties. You can run it to UBIT if you do a lot of those flips in a year. Like I'm saying, you're doing more than 3. If you're just flipping 1 or 2 properties a year in the Roth account, you don't run into this UBIT. So there's really UBIT's the only thing. We have separate webinars and podcast episodes. It's a chapter in my book on UBIT. So that's the only snag. But if you're just doing private money lending or just buying rentals or you're flipping properties with cash, I wouldn't worry about it. Now you might have UDFI if you have debt. So let's say let's say your Roth IRA owns a property and you go get someone else's IRA to be the private money lender to fund the rehab. Well, now you have some debt leverage that your Roth IRA has. There's a tax called UDFI. Again, webinar, chapter in my book, podcast episode.
I like this question, and I'll take it to, and then you chime in. So Dawn asked, can you please explain how I'd use my self-directed IRA for the down payment on a real estate deal and then go get a non-recourse loan for the remaining balance of the purchase? Then, so it's 2 parts, then I would like to refinance it at 100% to recycle my down payment to fund another deal. And I do have a strategy on that, which is totally cool. So the first part of it is we have a list of providers on our website. You can just go to directedira.com, go to the Learn section, and we have a list of some relationships on there that you can go and resources for different non-recourse lenders.
Yeah, they're all banks that do non-recourse loans to IRAs or IRA LLCs because you got to have a non-recourse loan.
And they typically, like right now, they want the IRA to come in for call it 30, 40%, sometimes 50%. of the IRA proceeds as the down payment. Some of them want additional funds held in reserve in the checking account as well. So they're each like, have some different parameters. Okay, so it totally gets it. So that's the structure, Let's say it was a 100K deal. It's in, Cleveland, Ohio, as an example, which, I think you'd still get a deal probably for 100 there, maybe. But let's say the IRA puts down $30,000, they get a non-recourse loan for $70,000, and boom, you did it. So there was the transaction, right? Now, you want to go get that down payment back, you're going to need a private lender on that. So again, how to fund your deal with other people's IRAs, you're looking at other people that you became the deal maker, so you got a deal, and you want to get your stuff out, you need to go find a private lender. They're going to step in, okay? You're going to pay off the non-recourse loan. You're going to get your money back, and now they're going to be the lien holder on that deal, and in on you with the deal. And that's a cool velocity model. Totally love that. A lot of people do that. So that's the strategy on how you do that. It's pretty much the only thing I think of. You're going to have to go network into a private lender.
Yeah. One thing to make sure you're looking out for is any prepayment penalty on those non-recourse loans.
Yes.
Some of the non-recourse lenders, because they want you to hold it for the long haul, they don't like to do short-term loans. They make money the longer their money is loaned to you. So some of them do have a prepayment penalty if you pay it off before a year or 2 or 3. I don't know. So just check that term if that's a strategy.
It's typically, you're right. It's typically, from what I've seen in the underwriting, it's like 1 to 3 years.
Yeah.
So, but that's fine. That's good, right?
Yeah. And there might be some that don't. I don't know.
Check it out.
Yeah.
You can, that could be one of the due diligence things that you inquire of with some of the non-recourse lenders that you have.
But I'll tell you, I'm just going to say from the banks, they don't really want to lend if they know you're going to pay the loan off in 6 months. They don't want to go through all that process to get a loan out that they can start earning interest that then you pay right back off. So if you lead with that might not go very well.
Typically what you do is something like, hey, just, I'm assuming there's a prepayment. What is that? What would I be looking at for that? They'll tell you because they got it, but they're not going to be like, it's nothing. Because they don't want you to do that 30 days later. Okay, with self-directed IRAs, are there any restrictions on investing all of your IRA into one deal?
No, there's no restrictions. You could buy all Apple stock. You could buy one property. You could lend it all in one deal. You could put it all in one crypto. I mean, there's no restrictions. It's just that's the thing with self-directed accounts. It's your own investment philosophy. What do you want to do? I mean, do what you like. I mean, a lot of people are like, I should be invested in 10 different things so I'm diversified. Okay. I mean, I don't know what's right, Or some people are like, just invest in the thing you're good at and just keep doing the same thing over and over again. That's kind of more my personal style. But everybody lands somewhere different.
Absolutely. All right, let's hit one more, and then Matt and I'll hit some dialogue on today's topic. So should a self-directed IRA holder want to invest in a fund, so call it a private company, that only allows accredited investors? How does the self-directed IRA qualify as an accredited investor, or is it based on the qualifications as you, the IRA owner?
Yeah, you answered your question right there. That's exactly it. So for your self-directed IRA, the IRA qualifies if the account owner qualifies individually. So when you're doing your accredited investor questionnaire, you're really qualifying based on your personal information because the IRA is your account. So that's how your IRA is going to qualify.
Okay, so how to fund your deal with other people's IRAs? Well,
now I mean, Aaron did this for a long time. That's why I kind of mentioned that on the front end of talking to people. People had IRAs. He was raising money for note investments, buying, I don't know, you can explain what you're doing, but that's how Aaron and I met through some of the conference he was doing, and he was essentially raising money at sometimes at those things. So,
or just moving deals, selling deals. And I was looking for IRA investors to buy those deals.
Yeah.
Because they had the most money in their retirement accounts.
And they're looking for deals.
Yeah. and they want passive income, that interest we'll call it interest income is what they're looking for. Typically something a little bit better than the markets. They're trying to call it 6%. Yeah. But really I led with the self-directed IRA handbook right there and educating people. Yeah. So, people they don't know what they don't know. We have just a ton of conversations on a daily basis that they just had no idea that they could go buy a real estate property in their own community with their retirement account. Yeah. So it kind of starts there with just education of, hey, did you know? We all have a buddy, or family that left a job and has that old 401k, and it's in stocks, bonds, and mutual funds. That's where it's at.
Yeah.
So when you're out having conversations and sharing, it starts with, you got to be sharing what you're doing. And like, if you're a real estate person and you're sharing all the deals that you're doing, and and did you know, Aunt Sally, that you could take some of that money you had at Honeywell and put that in what's called a self-directed IRA and go buy 3 rental properties in Phoenix, Arizona? And she's like, no. Okay, I'll call Schwab tomorrow.
Yeah.
I'll call Charles Schwab tomorrow and do it. Like, well, no, Aunt Sally doesn't work that way. But and you got to tell them. Yeah. Like, it has to be in a self-directed IRA. You called Schwab, they'd be like, yeah, we don't do that. No. Before you called your advisor, usually they're like, they don't want you to do that. Yeah. Because they're losing money. But not all of them. Some, dealing with what's called alternatives, right? But it really starts there. And so it's more about you sharing, like, what you're doing and what the possibilities are. And then you got to give them like a simple 1-pager of how it works. You got the old employer plan. You're going to put it in a self-directed IRA. You're going to buy a real estate deal. Okay, you're either going to have to work with the custodian, to process the paperwork, or you're going to do a checkbook IRA, and that's a whole other conversation. Yeah. Or you're going to do a solo K. That's another conversation. And so it takes with you getting educated on those different strategies and structures for you to be intelligently speaking to them on what their options are, but in a way that it's simple enough for them to understand. Because if you give them like all these freaking options, they're just not going to go do it. Yeah. So typically what I do is just give them a option. Be like, it's great. You got $300,000, that you're wanting to do. Let's say your plan was like $1 million at Honeywell, okay? But you want to take $300,000 and buy a rental property. I have a deal for you, okay? Mm-hmm. We're just going to go open up a self-directed IRA. You're going to move $300,000 over to that self-directed IRA, and I'm going to sell you a real estate deal. Mm-hmm. We're going to do the same purchase agreements that you did for buying your own home. Yeah. But the custodian's going to help you. So in this case, directed IRA, it's going to help you process some of that paperwork, signing on behalf of the IRA, and that's the easiest way to do it. Now, if they want like some more control, or they want to do more than one deal or several deals, and they want to move fast, then that's different. But usually, just start with a deal and teaching them.
I think there is a learning curve and a process to this. It's very rare that someone's going to do it next week. Yeah. They're going to want to learn this. I mean, this is people, they've saved a lot. There's been money coming out of their paycheck, or they've been throwing contributions in out of their bank account for a long time. And so they do want to get some education. Guys, that's why we do all this stuff. Mm-hmm. We want to educate people. We know this is the roadblock to people self-directing. That's why I wrote a freaking book, And so let them know where the resources are. Send them to the reputable places. Sometimes they can get lost on Google, and sometimes there's good stuff they stumble on. Sometimes there's bad.
A lot of false information.
Yeah, a lot of bad. Same thing with YouTube. You guys know it for whatever you're an expert in. Mm-hmm. There's a lot of garbage out there too in what you do. So, so help show them where the good information is on how to get educated. Hopefully, our webinars, our podcast, the book, all the stuff that we're trying to get out there content-wise will help educate them so they feel confident in what they're doing, because they need to. You just happen to have a deal. They need to feel confident in what they're doing with their retirement account money, and they got to kind of take control, because at the end of the day, they're making the decision.
So let's just take a step. Now that we kind of unpacked that a little bit, we'll just take a step back and just talk about your own sphere of influence in your network. Because when a lot of people go out and let's say they're like, hey, I want to start a fund, or I need to, create my own LLC. I'm going to pull people's money together and do joint ventures and all this stuff. It's like, that all sounds great, but if you've never done this before, all the money that you need to get going is in your own personal network. Yeah. And it's with people that aren't, necessarily a prohibited transaction, right? So not your immediate family members, but brothers, sisters, aunts, uncles, your buddy at the gym, your favorite bartender, whoever. It's all of your friends and, family that's not disqualified to do deals. They all have jobs. They all had prior jobs. They all have old 401ks. They've all been making contributions. They're just not educated on that they can take control of their retirement and invest in something like real estate or a private company or do notes or private lending. But it's all right there. So the easiest way to do it, rather than just like vomiting on them, like just verbal vomit, because you're just so excited to like get the deals done. Just tell them like what you're doing. Like I'm fixing and flipping this property like in the neighborhood, and I'm looking for people that want to go in on it with me.
Yeah.
Do you know anybody? Rather than asking them, ask if they know anybody.
Yeah.
And that's kind of like an easy approach too. Is like rather than asking that person directly that you're networking with, be like, do you know anybody?
Yeah,
Might be
and
interested.
sometimes you don't even have to ask. Sometimes it's just like, what do you, hey, I haven't seen you for a while. You bump into someone at the grocery store that's a friend of yours you haven't seen for a while. It's like, hey, what have you been up to? Oh, I've been, doing work, whatever it is you do. I'm also starting to do some real estate deals. I got a deal right now, and I got some people put their IRAs on it to invest in it with me, and
dangled a little carrot.
Yeah,
there.
people are like, what? I mean, it's funny. I had this one client that's done a lot of deals like Bill. We had on earlier, and he was just like, he just talked about it all the time. And he was kind of that personality that was a talker anyways, but it just worked. Yeah. Like he didn't have to ask at all. He said, I just talked about it all the time. And inevitably people would ask, you can do that? Yeah, you can do that. And I have another deal I'm doing next month, actually. It was just like, it was easy. But it's also something that people are intrigued by because they're learning something. Even like some really smart, sophisticated people, they're like, I never heard about that. Or someone's heard about it, but they never like got past like, I heard about it. And so sometimes just talking about it, letting people know what you're doing, they sometimes tend to find you. And then once you get that going, like Bill said, it's like, he has a network now. Like if he needs a deal funded tomorrow, he can get it funded because he's got the people that trust him, that he's had the conversations with, he's done the deals, he's got the track record and all that.
Yeah, again, everybody has them, so it's just like putting yourself out there to have the conversation. But I will say this, because you made a good point about the grocery store example you just did. They mentioned an IRA.
Yes.
Like you have to say it. You can't just be like, yeah, I'm just like doing some real estate, doing some lending. It's totally awesome. But like, no, I'm working with IRAs that are helping like do deals with me. And they're like, oh, well, how does that work? And like spark their intrigue. If you don't say those things, then they're just like, well, he's just doing real estate. Cool. Good for you.
Aaron and I worked with a private fund too, because this works if you're like raising money in private fund. I don't care what you're doing, you're raising money for your startup. All right. We had a group that already had investors in a private fund, and they were basically like, came to us to basically say, hey, help teach our people that are already in our network, that have already invested with us, how they can also use their IRA. Right. And like, we basically did a little bit of education, and I don't know, we did open a lot of accounts for them.
Hundreds.
Yeah.
It was easy. It was cool because, and that's a great value add and a great example. If you already have kind of a deal machine or investor base too, is educating them on how they can use retirement accounts to do it. So, and they just didn't know. They were all higher income earners, professional practitioners, doctors, dentists, attorneys, software engineers, busy, working 8, 10, 12-hour days. And they all have retirement accounts from previous employers too. So that's a great way. But it's just kind of having that conversation. There's tons of real estate clubs too. Everybody has several real estate clubs in your local market, and they're all looking for deals. There's basically a couple different kinds of people there, but one of the kinds of people there is like that have retirement dollars that already know what a self-directed IRA is, and they are looking for deals. So if you're a deal maker and have deal flow, go.
Yeah.
And like that's how you can fund your deal with other people's IRAs right there.
There you go.
Like they're there. Like they're just looking for a good deal. And again, they're basically looking for two things. One, something that has collateral they're really looking for, especially in real estate or lending. If it's a private company startup, that's different. That's a different bucket. But it's something with collateral. And two, they're looking for something better than 5-6%. That's what they're looking. That's why they're doing it. Otherwise, they would just stay in like SPY, S&P 500 ETF.
Push a button and don't do anything.
And they're done. So that's basically it. Okay.
All right, I'm going to take like a couple final questions.
Yeah, and then we'll wrap it up.
Yeah. And by the way, this is recorded, everyone. So We should have said that at the front end. So this will be up on the website in a couple days.
Okay, so I just spoke to a good friend last week, explained my venture with the self-directed IRA. Very nice. She's going to be 72 years old next week, and she would like to invest because she has to withdraw from her retirement account. So that's RMD, required minimum distribution. Does she have to move to a self-directed account and invest by the end of 2022 to get that tax benefit?
Well, the RMD is not going to go away.
Yeah.
So the self-directed IRA is still going to have RMD. So now she can still do it. You know, an RMD when you're 72 is maybe it's like 4%. You know, you got a $100,000 account. She might have to be taking $4,000 out of it per year at 72. It starts to kind of go up how much more you have to take as you get older. So she can invest still a piece of it, but she need to make sure it's liquid. So, you know, if she's going to hold this self-directed asset for 10 years, that she's got some cash flow on it or has an ability to sell it if she needs to satisfy her RMD. So, or she could take a piece of it too. She could leave some of it in the market, do whatever she wants, and take another piece and self-direct it.
Take RMD there.
Yeah, exactly. You can take RMD from the brokerage IRA, let's say, to satisfy the self-directed IRA.
A lot of people do that.
Yeah. You don't have to. You can take RMD from one account that can satisfy other accounts actually. So, which a lot of self-directed people do with their own RMD, but still going to have an RMD issue though. That's the self-directing is not going to get around that. All right. One other thing, we're going to give away a copy of my book. Tristan's going to pick someone.
I think we should give it to Cheryl Hansen. She asked about 5 or 6 questions.
Okay, so
Okay.
It sounds like she could use the book.
all right.
Okay, Tristan in the studio. Cheryl, you can give Tristan thanks. Get to Tristan. We'll drop Tristan's email in the chat. Email him your address. We're going to send you a copy of the Self-Directed IRA Handbook. Thanks for asking the questions. I'm sure they were good ones, Cheryl. Otherwise, Tristan wouldn't have done that, right?
I'm dropping it in the chat for everyone. Okay. There you go.
All right.
All right. Congratulations, Cheryl, and thank you for your good questions. I think you had about 6, so you were the winner. You were the winner. Okay, let's see. Should we hit? We'll hit this last one from Jean-Pierre, just because that's a great a great name.
Yeah.
If I'd like to partner with my checkbook self-directed IRA to purchase a rental property or do fix and flips, is there a recommended percentage of ownership or any other detail that we should be aware of to not trigger a prohibited transaction?
Well, if you want to personally partner with your checkbook IRA or your retirement account, the only way you can do that is with cash. And you have to set up another another LLC, which would be a multi-member IRA LLC that's comprised of personal cash you put in for your personal ownership and cash from the IRA LLC. And you got to go in together. This really got to be a multi-member IRA LLC setting. So, and that ownership in that LLC is based on the dollars invested. Now, that's if I'm reading your question. If you're talking about I want to partner personally with my IRA LLC, you can't do what Bill was talking about earlier of I'm the work partner personally. My retirement account's the cash partner. That doesn't work with your own retirement account. That's prohibited. You can only partner cash, where we value the dollars of the cash personally versus how we're going to value the dollars. They're exact same from your retirement account. So we break up the ownership in the LLC based on dollars. Now, if you were like, no, I just want to partner my IRA LLC with someone else who's going to do the deal. Well, that's negotiable.
Yeah.
The percent you get in the deal is how much you can negotiate.
I would say, I wonder, Jean-Pierre, if you were talking about maybe tax, like the triggering more UBIT than a prohibited transaction. I don't know. Like that could have been it. If you're going to do like more than 3 fix and flips or something, like I don't know. But okay,
All right.
there you go.
Is that the final question?
I think so.
All right.
I think that was good. Yeah.
Okay.
That was
Well,
good. On topic.
Did you have any final comments? I didn't want to.
No, I just I think at the end of the day, I would say, as cliche as it is, like it's a couple things. The 5 people that you hang around the most, and that you're communicating the most frequent to, they really comprise like your innermost circle, and of different connections you're making and stuff. And taking it a step further out from that is, continue building your network, your community out there, putting yourself out there, joining different clubs or associations, going to the real estate clubs, maybe it's a gym or a tennis club or racquetball, squash, whatever. Like just getting out there and doing it, being around people. If that's your goal, if like you're looking and you need you need deals, you need deal flow, and you need additional capital, building the network in the community. It's like so important for anything. Like even when Matt started the trust company, we had a relationship of, going on 10 years and like, boom. Yeah. That wouldn't have come to fruition if I wasn't out there doing events and needed him to come educate people on using a self-directed IRA to do real estate or private companies or private lending. Yeah. And talk about his book, then, it's like it's your relationships are everything. It's funny. I was talking to my wife and she was like, I think you should get to know this person better. That'd be a good person to add into your network. And I'm like, okay. But it's she gets it too because we talk about it. Yeah.
Yeah, and I think that was as funny as Bill was heading out to go play tennis. I mean, I don't know. There's other activities I'm sure that are great places to network and meet amazing people, but that could be a good place if you're looking for money. I don't know.
Yeah. I love it though. Like again, that's what even if there's lots of stuff, even virtual stuff that you can do now. Yeah.
My final comment is just about, this isn't really powerful because there's people that need your money to do deals. Mm-hmm. If you're someone that has a retirement account money, and then those of you that have deals, there's people that have money looking to invest it in something better than what the stock market and they're tired of doing. And so there's could be this perfect marriage, win-win situation. It's one of the reasons I love self-directing. So get out there. You got to talk. You got to communicate. Find each other. That's how the self-directed deals happen. It's people like Aaron was saying in your network, your community. Go to the places where there's people for what you need. If you're the person that needs a deal or the person that needs money, go to the places where those people hang out. Get to know people, and this could be even on social stuff and things like that. I mean, it could be social networking things. I don't know. Lots of different ways to do it. So
absolutely.
All right. Well, thanks everyone. The recording will be up in a few days. It'll be at directedira.com/webinar, and we'll be announcing the next webinar, I'm sure, in the next couple weeks. And thanks everyone. Stay calm. Self-direct on.